Welcome to Factful Finance, where we break down the steps to financial success in simple, actionable ways. Let's talk about something essential, yet often overlooked: building an emergency fund, especially if you're living on a tight budget. What if I told you that having a cushion for life's unexpected moments isn't just for the high earners? No matter how much you bring in, you can still take control of your financial future. Let's dive into how you can build that safety net, even if your income is on the lower end. Before we get into the strategies, here's a quick disclaimer. This content is for educational purposes only. We're offering general financial advice, but remember, when it comes to your unique situation, it's always best to consult with a certified financial professional for personalized guidance. Let's get started by understanding why an emergency fund is so crucial. According to the Federal Reserve, nearly 40% of Americans would struggle to cover a $400 emergency expense. That's a staggering statistic, but it's also a wake-up call. Without a buffer, a surprise bill, car repair, or medical expense can send you spiraling into debt. And with inflation hitting every budget hard, it's more important than ever to prepare for those financial curveballs. Now, let's break down how you can build your emergency fund, step by step. Step 1. Start small, but start today. You might think you need thousands of dollars to get started, but the truth is, even small contributions can add up. Let's say you aim for a modest goal of $500 for your first emergency fund target. If you can set aside $10 to $20 a week, you'll have that amount saved up in no time. Here's the kicker. Setting a small, achievable goal makes it less daunting, and consistency is the key. Step 2. Automate your savings. Automation is a game changer, especially when you're on a tight budget. Set up an automatic transfer from your checking account to a high-yield savings account each payday. Even if it's just $25, you won't miss it, and over time, the savings grow. Remember, the key is to make it effortless. Step 3. Cut out unnecessary expenses. Every little bit counts. Take a hard look at your budget and find areas where you can trim back. Whether it's skipping takeout for a week, canceling unused subscriptions, or finding cheaper alternatives for essentials, those small adjustments can free up more money for your emergency fund. For example, let's say Noah, a teacher on a modest income, used to spend $30 a week on coffee. By switching to making his own brew, he was able to put that money towards his savings. $120 a month adds up quickly. Step 4. Use windfalls wisely. Got a tax refund or a bonus at work? Rather than splurging, put a good chunk of that unexpected money into your emergency fund. In fact, studies show that Americans who direct their tax refunds towards savings are more likely to avoid debt and financial stress in the long run. Amelia, a freelance graphic designer, did just this and was able to save an additional $1,200 last year, an amount she didn't even plan for, but now has as a cushion for emergencies. Step 5. Be patient and stay consistent. Building an emergency fund doesn't happen overnight. It's about small, steady progress over time. Keep a mindset of long-term security. While it can feel slow at times, remember, every deposit is a step toward a more secure financial future. And don't forget, this is just part of your financial strategy. Once you hit your emergency fund goal, you can shift gears to tackle debt, invest for the future, or focus on other financial priorities. Which tip stood out to you the most? I'd love to hear about your emergency fund journey. Drop your thoughts in the comments below. If you found this helpful and want more actionable tips to improve your finances, don't forget to subscribe and hit the like button. Looking to build your financial foundation even further? You won't want to miss the next video. Click the one on screen now to level up your money game. Remember, this content is for educational purposes only. Always consult with a certified financial professional for guidance tailored to your specific needs.